Okay, so yeah, we can get started here. So thanks everyone for joining our community call. We do these once a month, but we rotate through 3 different topics. We have, 1 month we do kind of a big project update that I present. 1 month we do a node operator specific call where we focus on those running nodes on the LivePeer network. And then this one is a topic call that Nelson here leads and moderates and selects an appropriate topic each month. And I think, I'll kick it over to Nelson in a minute, but just a note, we are streaming to livepeer.org/TV, and we're also recording. So, everyone's welcome to participate and join, but note that this will be recorded and shared later. Yeah, it's totally meant to be an open discussion. So feel free to interrupt, ask questions anytime. There's no presentation, especially this call, which I think is meant to be more of an open discussion, group discussion on a couple recent and important topics going on in LivePeer. And it might not take the full hour, but we have the hour for anyone who wants to hang around and chat. So with that, I will kick it over to Nelson.
Awesome. Yeah, thanks for that, Doug. And yeah, so for a bit of context, guys, so I'm Nelson. I'm a community member and also on the LivePeer Grants Committee, helping sort of, fund initiatives that we think will help the LivePeer community. And yeah, so the purpose of these calls is really to just have an open call for the community, for people to kind of engage, ask questions, and yeah, to discuss what's happening in the LivePeer network. So yeah, on this call, we won't be doing a presentation, but I did think it might be helpful to share my screen and to just give a little bit of context on where we're sort of at with the network. So I'm just going to start sharing my screen.
While you're doing that, I see Jen has her hand raised. Is that an intentional hand raise?
No, it was not. I apologize, everyone. Sorry, Nelson.
No, that's all right.
I rarely see the hand raise feature used.
Cool. Can everyone see my screen?
It's coming up.
Yes.
Yes.
Okay, terrific. Yeah, so there's a few different topics we wanted to talk about, but most of them sort of relate to where we're at with the LivePeer network, what's working, some of the challenges, particularly around sort of the congestion on the Ethereum network, and then also to look at some of the changes that have been made, since last year. So I guess the first and most obvious that I think many of us probably are aware of, but for those of us which are new, the LivePeer Explorer has been updated to now show some of the estimated usage across the network and also some of the fees flowing through the network. And so it's been really positive to see that that's been sort of trending upwards. We've been seeing a lot more usage flowing through the network and also a lot more fees flowing through the network. I guess one caveat there would be, I know there's been a lot of price volatility in the price of Ethereum, which has skewed some of these numbers and the pricing. And then we've also seen the participation rate has actually been, picking up. There was a drop down where we saw a drop below 50%, and we did see the economics kick in, but it is above 50% again. And so I guess that there's a few different topics I want to talk about. I also want to go a little bit over the sort of staking dashboard and the sort of performance rankings to talk about the incentive program and some of the potential changes that were posed. But I thought first, maybe just to keep things fairly high level, it would be great to perhaps get some context from anyone on the team in regards to what LivePeer has been sort of seeing in terms of the growth in usage, where that's coming from, why that's happening, and yeah, I guess any sort of challenges looking at that, looking forward.
Sure. Yeah, I'm happy to weigh in on that. So, yeah, this usage number is actually an important project that we worked on the last few weeks because previously we had just been showing fees that were paid into the network, which is probably what a lot of like node operators and token holders care about. It's like, how much money am I earning? Except we thought that it was actually pretty difficult for users to connect the dollar sign in terms of number of fees with how the network's actually being used and whether video is actually flowing through, right? Like, what does it mean that $2,000 flowed through? Is that a lot of video? like, does it represent, a bunch of users? Is anyone streaming? Where's this coming from? Is that a lot? Is that a little, right? But we thought that like minutes of video streamed with, hundreds of thousands over a week, over millions over the course of a month, actually would be this tangible number that actually represented like real video flowing through the network and didn't swing with the price of Ethereum and volatility and whatnot. And so we wanted to put that front and center, and hopefully, like you see, it's going up and to the right, and I can talk about like where that's coming from. But hopefully, as more and more apps are onboarded, more people build on LivePeer, the community can really rally around this number as the thing that we can see grow and we can help contribute to the growth of, because that's really, the more that it's used, the healthier this ecosystem will be, the more valuable the network will be, et cetera. And so where are all these minutes of video coming from? There's a few different sources. One is the livepeer.com API. That's the easiest way for video developers to get started using LivePeer, because it hides all of the crypto complexity and cryptocurrency and blockchain. It just lets them register an API key and start streaming. So we've seen a number of different apps on board and running that API in production and also evaluating that in their staging environments, right? And so that's been growing. It really was kind of opened up as self-serve just less than 2 months ago. And we're seeing a growing number of API key registrations, paid users, et cetera. So that usage drives a lot of these minutes and the fees. Then there's also third-party apps that build on the network directly. So you've seen things like file.video, where it's a Filecoin integration. People can upload a video and it'll be transcoded through LivePeer and stored. You see apps like Voodfee, which is a similar app connected to the Web3 space. So they pay fees into the LivePeer network as well. So that's like another contributing source. And then the third would be, I guess, lots of like internal infrastructure and testing. So like this performance leaderboard that sends streams to all the orchestrators a couple times a day and measures their performance. That's contributing minutes streamed and transcoded and fees into the platform as well. So I think those are like three of the sources that contribute. It's interesting to note it says estimated usage rather than actual usage, and that's because this is an open, decentralized public network, and no video actually hits the blockchain, just the payments hit the blockchain. So there is an estimation process that goes into calculating, it takes into account the price of ETH, it takes into account what nodes are advertising they're charging, and it tries to back out an estimate from some of the fees, how many minutes may have been streamed there. Cool, so I think that's the overview of the usage, but it's been really exciting to see more adoption through the livepeer.com API, leading to the growth in these minutes.
Yeah, no, okay, interesting. And in terms of the types of projects that are using LivePeer, are you seeing any sort of particular patterns? Are you finding it's mostly startups, and why are they sort of selecting LivePeer?
Yep. If you look at livepeer.com, you'll see the messaging is aimed at user-generated content sites. Or streaming platforms. This is where these apps let their users stream and create streams, often for free, and they may monetize the really popular streams, but they may have to cover the infrastructure costs for the long tail streams that don't have a tremendous amount of viewership. And so that's really like, and because they have to cover that cost, that's where LivePeer's cost effectiveness makes a huge difference. So, we've seen, we keep talking about PlayDJ as kind of the prototype case study app, because they're one that's given permission to kind of disclose and do some marketing around it. But, it's a DJ streaming application where DJs are streaming their music. We've seen sports streaming. We've seen creative artists streaming. A lot of events continue to use it, despite LivePeer maybe not making quite as much difference on the economics of doing live events, but people still like the end-to-end streaming capabilities. And the price point. So those are like various use cases, but I really think the user-generated content is where you'll see apps that launch on LivePeer because it's viable to do so, but grow from 2 or 3 concurrent streams in the first week to tens and the second few weeks to hundreds to hopefully thousands of streams, and look like the next versions of things that are just as impactful as, you know, Twitch and TikTok.
Yeah, okay, interesting.
And to
And
help them, do you mind if I say something?
yeah,
go ahead.
Yeah, and to Doug's point with the user-generated content, we're trying on livepeer.com to really make it easy for a UGC platform to sign up. So some stuff that, you know, these UGC platform engineers would have to figure out on their own, like how to deliver seamless playback via a content delivery network. We bundle that all for them, and we're just trying to and we just pass along the pricing to them, but we're just trying to make it so easy for them to transcode on the LivePeer network, by providing all those like sidecar services with them. So that's a bit of the strategy we're taking to help push traffic onto the network. Yeah.
Yeah, okay. No, that's helpful context. And maybe one related question, which I've seen sort of posted in the Discord, which I thought could be interesting, yeah, to sort of discuss as a community, but also maybe understand the technical feasibility of, is so today in the LivePin network, and this sort of more affects the sort of supply side or node operator or orchestrators, and not the demand side of the network. But right now, Ethereum sort of payments, or LivePeer's payments, are dominated in ETH, and we've seen a lot of volatility in the price of Ethereum. And so this does trickle through into the fee volume, because while in a perfect market, all of these orchestrators would be in real time updating their pricing. In reality, it doesn't seem to play like that. And so I'm guessing that also does play into the estimated usage, because the actual pricing is based on ETH. So yeah, is the LivePeer team considering using, you know, an alternative like USDC or DAI? Is this something that's on the roadmap, and how difficult would it be to change payment to an ERC20, for example?
I would give a quick note that I do think the fluctuating price of ETH affects the fee volume number. I think its impact on the minutes streamed number is probably minimal, if at all, because I think that estimate takes into account the fluctuating price of ETH. But one clarification, but yeah, I guess before I jump in and talk about that, does anyone else have any opinions or thoughts to share about, you know, whether the effort to reprice in, you know, a stable coin or any ERC20 is, you know, appropriate right now, interesting, if it would be compelling to you as a node operator? Anyone have any opinions?
Yeah, I thought about this. I think one approach that's interesting here is giving like broadcasters the freedom to target what price feed. So like you can set a price and have it like track the price of USD that you want to charge as a broadcaster, but still have the settlement layer be ETH, if that makes sense. And that would avoid a change to the actual protocol. So that's one approach, like give the freedom to broadcasters to track a certain price feed.
In practice, would you have to rely on, you'd have to assume that either the market is really efficient or orchestrators are also, you know, running a piece of software that updates their pricing and tracks the price, just so that you don't like get priced out, and like you have to make sure there's orchestrators available to do the work, right?
Right. Yeah, that would be, you have to make the assumption that orchestrators are available to accept the price that you're willing to pay. Yeah, that's true.
Yeah,
I think. Sorry.
Oh, I was just going to add on to that, where, yeah, I think the benefit of that approach is that it's minimally invasive, but the downside is that it requires kind of everyone to dynamically adjust their prices to target whatever currency you're pegging to. So it's a little more difficult if it's relying on external software. So you need to run external software in order to dynamically adjust your price. If you take it one step further, you can make it slightly easier if that dynamic adjustment was embedded within the node itself. So as opposed to having to run an external piece of software in order to do this for you, if it automatically happened and it was a first-class feature in the node software. So that would be like one step beyond kind of what Adam suggested. That might help a little bit if that approach was to be taken.
Yeah, I think one of the additional risks there as well is that as long as you're using Ethereum, there is someone who is taking on that Ethereum price risk, which today in the network, that may not be a big concern because, you know, prices are rising. But I do think if we're going to have sort of very large businesses, they don't really want to be taking on that Ethereum price risk as a part of their operations.
Yeah, Nelson, one way that they could, you know, offset that risk is obviously like immediately convert the earnings to a stable coin. So as a node operator, like let's make the assumption that they're targeting a USD price. As soon as they redeem a winning ticket, if price volatility is a concern, they could just like dynamically convert the ETH to a stable coin.
That's true, but then there's also the high gas costs as well, which is the other factor. Yeah.
User experience issues just surround this one at every juncture. It's like in a perfect vacuum, of course, pricing in a stable coin would be maybe easier for everyone, less, you know, risk, etc. But then you need potentially like 3 different tokens to interact with Ethereum. You need LivePeer token, you need Ether, and you need stablecoin, right? And you have to do transactions to, you know, deposit, convert, withdraw these potentially separately, and you need the right, you know, tools and interfaces for acquiring them, for using them, etc. And there's just work and complexity within the protocol to, you know, add support for all this. And so the question becomes like, is it worth it? What benefit would we get in the system? Would it actually help the growth of LivePeer in the short term? I haven't heard loud demand from the broadcasters on a network to, you know, pay in a stable coin yet, right? I think we should probably like follow that demand in terms of prioritizing it. But if there was some reason why it would dramatically increase the utilization of the network or really help the supply side, then we could like prioritize it higher. Or if anyone kind of as a third party is interested in like making a proposal, taking on, you know, a shot at the protocol and client updates to support it, it might not be an incredibly heavy lift. And probably everyone would appreciate the flexibility.
You guys know how to use the raise hand button, right? I'm just kidding.
I've never pressed it.
I'll just say real quick that it seems amazing that this community is so like what you just stated. There's so much opportunity with LivePeer. It's amazing, to say the least.
Thank you. Well, I don't know if you shared. What was your name? I didn't catch when I came in.
I'm Andre Johnson with Urban Country Films. I'm Urban Country Films in the Discord. Awesome.
Great to have you here. Yeah. And if I missed it, did you say a few words about what you guys are building or what type of media you're streaming?
So what we have going on is a group of content creators that really are just looking for the freedom of expression, and we want to be able to bring that to other content creators. And hey, listen, here's a place, here's a way for you to own your content. I want to put you, put together a website for you with your streaming capabilities, get into the app development, and be able to connect the end user and the content creator just without the third party, and allow them to do their own advertising, charge for their own advertising and charge for their own content as they feel free, and just have so much more flexibility to do whatever they want to do, rather than having these third parties silence anybody that don't like what they have to say.
Awesome. Cool. Yeah, glad to have you here. And yeah, seeing you pop up in the Discord, we're standing by to help with whatever you need in terms of integration development as you're playing around.
Awesome, man. Thank you guys. Great to be here. And we have there's a few more of the guys on the call too.
Yeah, and I'm Michael, and I just want to add that also, in our research in trying to have more control over our content, when we do our research of life here, we saw what you guys are building, and realized that we're at the ground level and want to be involved as much as it is within your company's capabilities and our realistic capabilities. So this is something that we come up on because of my interest in crypto and blockchain and the technology, the financial side, all of that. And when I observe life here and see what it is in theory, and and what is actually being practiced, we're here to just grow with this. So in a nutshell, I'm out of curiosity, common sense, all of these things, we would just want to be here with this and get as much assistance as you guys are available to provide.
Great. Yeah, the good news is completely open project, open source, open community. So you're here, you're in it, and anyone can be part of it, contribute to it as well. So yeah, good to have you here, and you know where to find us in the Discord.
Okay.
Cool. All right, Nelson, you want to press on topic number 2?
Yeah, sure. I thought I might just touch on one quick point while we're here. So there was a bit of discussion in Discord when the participation rate of the network dropped below 50%. And so for those that aren't familiar, with the live pair economics, the inflation rate comes down over time. And then once it hits if it drops below the 50% threshold, the inflation does start to climb again. And so there was some sort of speculation in the Discord that there was a large holder who was moving funds. So we're now back above 56%. I did just sort of model it out to see the impact it had. You can see here it's a very tiny blip in the sort of current trajectory. And at this current rate, the inflation rate is due to hit zero by around sort of May 2022. So yeah, that's just a quick side point I thought might be of interest to people. Cool.
Thanks for modeling that. It's interesting that we saw the participation rate drop as there was some kind of speculative news around the grayscale news that came out, and so it's interesting to think about future news events as the inflation rate's a little lower, whether you would see a similar sort of unbonding around those events, and whether that might trigger the inflation rate to rise again. So it's just something to keep an eye on.
Yeah, no, that's an interesting point, particularly if LPT was sort of being used in other parts of DeFi, be that sort of for liquidity or perhaps for lending. That could sort of create opportunities or periods of time where some parts of the network may decide that they want to lend it out instead. and that could sort of trigger those kind of events. So it's interesting to see the economics working as designed. Cool. And so then the next thing I wanted to dive a little bit into was to discuss a little bit about the performance leaderboard. So for those of you that are familiar with it, this is the traditional staking leaderboard, which orders the orchestrators based on how much stake they have delegated to them. And we can see here fees flowing through the network, which is really great. And then recently, with the launch of the MVP program, there was also a performance tab, which has been added. And interestingly, we've seen a lot of orchestrators really step up and have done a lot of work to improve their scores, VideoJack being one of them, Chainflow being another. And I think it's really interesting because we also recently conducted the IP Grants Committee actually funded an MVP performance program, which was designed to help sort of incentivize orchestrators to improve their performance. And I think what we've actually sort of observed, or at least my sort of theory, is that a lot of this seems to actually be more in relation to making it more transparent how these orchestrators were performing, and not as much for those economic incentives. But I think it'd be interesting if anyone from the team or the community would like to chime in on perhaps why they sort of work to improve their scores and how people are sort of thinking about this.
I can say I have not put in the work to improve my score yet, and I'm embarrassed by it. I hate seeing a low score near my name.
Yeah, I think that's a fair point. And
I
I think
that's a good motivator and incentive. I think just avoiding it makes people avoid looking embarrassed. Just having it, like you said, just making it transparent. People wanna be in like the top 10, regardless of if there's an economic incentive.
Yeah, and I think interestingly, we have seen a lot of the community put out sort of posts to outline how they managed to increase their scores. So I think we have also sort of seen the knowledge around how to run these setups more effectively has increased, which has been really cool to see as well.
One question I had is I noticed, so the amount of LPT that people could earn in the incentive program was actually a lot per node. It was pretty meaningful. But LPT is pretty abundant for a lot of the node operators because there's inflationary LPT every day and large amounts of stake that are on these nodes. But you actually see people in the Discord chat really trying to compete to earn the fees that are flowing through right now in ETH, in a way that feels more tangible or meaningful, and people are firing up their GPU based nodes to try and earn that. I think that's an important signal, right? The fees might actually be the bigger incentive, even if the LPT value is perceived as potentially more at the time. And that's really where you want to ultimately get, right? You want these nodes competing for fees because it's not sustainable just to issue LPT forever.
Yeah, it's a good point. I did notice the orchestrator named Maj Orca, at one point seemed to be earning $1,000 a day in fees. So yeah, that's definitely a big incentive.
And a super cute pun on Mallorca.
Ah, that's what that is. Nice one.
Yeah, one thought that I had is that, so I definitely think ultimately the value that you stand to earn is critical, right? And it's an important part of what incentivizes someone to perform well on the network. But I also don't think it should be underestimated, this sense of joining the community and having a path to succeed regardless of what the value at stake is. like ultimately you want there to be value at stake, but having a path to success where you can actually start seeing work being done on your node, while like some might view that as, so if you view that in a vacuum without thinking about the value at stake, some might view that as like, oh, there isn't really an incentive to do that. But I actually think that there is, and it's more of a kind of motivational thing. Like when you come into the community, if you have a clear path to understand like how you can do well, I do think that's actually quite important and is like a strong like social incentive to kind of do the work necessary to perform well. And you need that value on the line for people to stick around and to kind of excel even more past that point. But I do think it's worth keeping in mind. I think there is a lot of power in like that path to success at the very beginning, that might not even be that tightly coupled with the actual value that you stand to earn. Although you still need that value, that you still need to be able to earn that value for the people to stick around. But I think that like path to success at the very beginning is also pretty important.
Yeah, and I think another observation too, and clarify this if I'm wrong, guys. But so my understanding is that in a way today, the work on the network is allocated based on the stake of orchestrators. And the performance, while we have this tab now, which sort of provides a helpful resource for the orchestrators and the community to allocate, I guess, based on the score of these orchestrators, their performance score doesn't, or their success rate doesn't impact their likelihood of winning that work. My understanding is
that's actually not totally correct, Nelson.
Okay.
Sorry to interrupt, but I thought it was important to clarify. So if all of the nodes had the exact same performance score, then the work would be allocated approximately according to stake. But if your node is not performing or is not able to retain work or handle a certain level of scale of work, your stake hardly matters. The broadcast nodes will find another node to work with. So in essence, your performance matters a lot. If you're highly performing, you can actually outperform and earn more work than just what your stake would otherwise route towards. But the stake becomes just an input. It's the security input. The more stake you have, the more security, so the more likely you are to be selected. But performance does matter. Not so much the score, but just your history of actually performing and returning the video segments quickly.
Mm-hmm. Yeah. Okay. Thank you. That's helpful context. And so we've run this one MVP performance program, and I know we sort of had some talk about perhaps we would sort of run another one, but I guess at a more high level, we sort of said that perhaps the fees flowing through the network are acting as a better incentive and maybe it wouldn't be necessary. But if the community was to incentivize anything, what do we think would be, if we were to do a more targeted program, is there anything that the community sort of thinks would be worth incentivizing in terms of the orchestrator pool?
So two things that I think would be useful to consider when thinking about a follow-on iteration are, one, addressing a kind of problem in the first iteration, and this has to do with just the way that the performance leaderboard tracks performance. And it's this problem where we actually saw cases where orchestrator cared more about performing well on the test streams than they did performing well on just like regular work that might be routed to them on the network, because the performance leaderboard measurements were solely based on the test streams and not based on the orchestrator's performance on kind of all work that they might be receiving on the network. So if they received a bunch of work on the network and were unable to handle the test streams for whatever reason, then they would see lower performance on the leaderboard. So I think that is a problem that I think in a follow-on iteration ideally would be addressed, because the type of performance that we would like to incentivize is treating all work that they could possibly receive the same. So that what we really want to see is like any work that you might receive on the network, if you're performing well on it, that reflects positively on your score. So I think that's one thing that would be worthwhile considering going into a next iteration. And I think another thing that would be worthwhile considering is, and this has to do with like the onboarding process of new orchestrators. I think one thing we didn't see a whole lot of in the first MVP was a lot of new orchestrator entrants. And I think there's a variety of reasons for that. I think some of the reasons might include a lack of awareness. There wasn't exactly a strong marketing push for that. It was a very quickly put together program, so there wasn't a whole lot of awareness spreading ahead of time. So there's reasons for why there might not have been as many new entrants. But when thinking about follow-on program, I think it'd be interesting to think about the experience specifically of new entrants. So if the goal is to bring in new orchestrators, thinking about like what their experience looks like coming in and seeing if that program can, at least part of that program can be designed to make that a smoother onboarding experience. So to use as an example, if there was a subset of criteria in that program that allowed someone to earn a small amount of LPT immediately, as long as they performed well during the onboarding experience, then I think that could be the example of a plus for that onboarding experience, because there's this immediate feedback in the onboarding process where you see that you perform well and see like the rewards that you get from performing well. So I think a next iteration of a program, if it could have a subset of criteria that assists in that type of onboarding process, that might be interesting to consider as well.
Yeah,
Thanks,
John.
Shannon. I have like a thought that's interesting related to, you know, what's being incentivized and fees versus LPT and whatnot. It's related to something I was reading yesterday. I think it might have been in the Masari newsletter, where they talked about protocol token holders and governance prioritizing growth before fee extraction. And, you know, they use Uniswap as the example where, you know, Uniswap token holders could use governance to take large fees from all the trades being done through the platform. But in the early days, rather than prioritizing that, they're just prioritizing growth and adoption and saying, you know, there'll be opportunity to, you know, find the right fee balance to extract later once we achieve scale, once we have more volume than Coinbase and Binance, and when Uniswap's the only platform that everyone trades through. And it's interesting because that actually matches a lot of the philosophy of like high growth venture backed startup world, where a lot of like social apps in particular would not be charging for their services or would not be even introducing an ad model or whatnot until they built up this wide growth network effect of users. And so it's interesting, just like, not that kind of the you know, ad models of the social world are what we're trying to recreate here, but it'd be interesting to think about applying that to live peer, and what would it mean for all of the node operators and orchestrators to prioritize like growth of the network in terms of minutes streamed through the network. And if there was some way to tie incentives to everyone contributing to that growth, as opposed to immediately trying to have everything incentivized by, you know, the ETH fees that are being earned in the early days. You know, I'm just kind of like leaving it there as a thought that's an input to as we design like updated incentive programs. But yeah, I don't have any like direct suggestion or solution around that.
I think this notion of prioritizing growth over fee extraction is interesting, and I think some other interesting work in that area to perhaps use as a reference is in the pretty nascent Filecoin ecosystem. One project that I know that they've been working on is this program called Filecoin Plus, where it's this program built on top of the new nascent Filecoin network, where Filecoin miners are able to earn a multiplier on their Filecoin block rewards if they store useful data. And there's this whole social process for determining what useful data consists of that might be out of scope of this conversation. But one particular detail of that program that I thought was interesting related to this growth over fee extraction model is that one of the things that the Filecoin miners that participate in this program are encouraged to do is to offer some differentiation in their service, whether it be like advertising how much bandwidth they have, or something that's related to the growth over fee extraction model is charging a really, really low price, or in some cases, a price of zero. So in the program dashboard, you can actually see in a lot of cases, the miners participating in the program offering their services for free because they plan on they plan on most of the compensation coming from speculating on the multiplier on the block reward. So I think we'll see how that program plays out, but I think it's an interesting example of this growth over fee extraction model where some miners are choosing to differentiate themselves by doing everything completely for free from like a client perspective. So like clients won't actually need to pay for a lot of storage up until a certain point, but they're planning on getting more compensation from the multiplier that they get from the block reward. So I think that's an interesting kind of example to kind of look to see what we can learn from when we think about what we might want to do within our own particular ecosystem.
Yeah, I think one other interesting parallel there to use the Uniswap example would be something like Sushi Swap, which basically has a fairly similar model to Uniswap, but has used token incentives to help kind of drive a lot of liquidity to their platform. Uniswap still has like 50% market share, but Sushi Swap has about 25% market share now. So it is interesting to think about something like LivePeer. We do use inflation as part of sort of LivePeer staking model and for the security of the network. But it is interesting to think, would there be a way to perhaps link, if we were to think about that sort of growth over fee extraction model, would there be a way to tie inflation rewards to useful work in the network? And yeah, as a sort of added incentive perhaps for people to scale up their setups and perhaps to subsidize workflow into the network. Cool. So anyway, perhaps now to move on to the third sort of question or topic I had, which ties back to a lot of the questions we've sort of seen in the Discord, and that's really people asking questions about sort of gas prices, which have been very high recently, scalability more generally, and so I guess for context, there's two gas optimization proposals that are in the works at the moment, which is LAP 36 and LAP 52. So yeah, I guess it'd be great to get an update from anyone on how those are going, but then also to open up more broadly to, are there any other gas optimizations or scaling techniques which are currently sort of being explored?
The quick overview is that LIP 36 has been deployed live for a couple of months and addressed the super high cost of gas associated with claiming all of the outstanding staking rewards and claiming staking rewards going forward. The actual act of staking and unstaking, swings with the price of gas swings. There's kind of very little we can do about that or see that we can do about that in the super short term. but those are pretty infrequent actions. The outstanding proposal, LIP56, reduces the cost of gas for those running nodes to claim their live peer token every day. And the high level is that rather than claim your token every single day, you would do it once a week, let's say. The interval is up for debate, but once a week, and you would just get 7x the token as opposed to getting, 1 unit of token on 7 days. You would just get 7 units of token on 1 day. So you'd have 1/7 of the gas cost to do it, and that would make a big difference. And the drawbacks there are pretty minimal if people are running nodes over a long period of time. If you're gonna just run a node for a couple of days and exit before you got any rewards, then that might be a drawback, but very few people are getting that. So that's a proposal which has been out there for a while. And I think it would really just take a little bit of community coordination to push it over the edge from where it is now to actually officially proposed and open for polling. There's probably a little bit of technical validation work and testing to do around that. I think that's the current status. I'm not going to talk about like bigger, longer term changes like layer 2 and stuff like that, but if anyone wants to, they can.
Yeah, so I think with regards to bigger changes that would improve the general scalability of kind of the blockchain related interactions necessary in the live peer network, I think it's less of a question of if and it's a question of when. I think it's something that we will do, and it's really just a matter of like sequencing and prioritization. And I think the main reason that we're focusing on some of these smaller proposals right now is that we believe that they can provide some immediate impact, at least to a subset of users on the network. So previously with LIP36 and 52, that was very targeted towards token holders or stakers. And then with LIP56, it's very much targeted towards the orchestrator operators. And because these things are things that we believe that can be completed in a shorter time frame, we think it could still be valuable, even if it doesn't necessarily solve, even if it's not like a 10x or like 100x magnitude change, which is like what we ultimately would hope to get. So I think that's the reason for prioritizing those first. And it also gives members of the core team the ability to focus on some of these other things that we've been talking about on the call, right? So things like iterating on the performance incentive program, continuing to drive growth on the network in any way that we can. And then when it comes to larger scalability changes, I think they will be things that will be worked on, but it's probably just going to fall behind some of the more immediate things that we've talked about on this call thus far.
Yeah, I think perhaps one other observation on layer 2 as well is it seems that there's yet to be a real consensus among like the Ethereum community around specific layer 2s. There are projects using Optimism, like Synthetics and Uniswap, sort of exploring that, and then other projects using Starkware and other solutions. So it does seem like a lot of the Ethereum community is sort of waiting for there to be some kind of consensus, because I do think it would be, a bad move if LivePeer made a deep investment in a certain layer 2 and then that layer 2 didn't end up being what, perhaps the layer 2 that becomes the standard within Ethereum. So I think, that's a very good point. Cool. And did anyone else have any other general questions? That could be about anything we've discussed on the call, or even just more broadly about LivePeer. Cool, guys. All right. Well, in that case, I think we can probably wrap it up here.
Awesome. Thanks, Nelson, for leading the call as always. And for everyone else, you know where to find us in the Discord. Next community call, I think, is a node operator focused community call 1 month from now.
Thank you.
Awesome. Thanks for joining, everyone.
All right. Bye.
Bye. Thank you. Thanks, Nelson.
Bye-bye.